Well, what could have started off as a Valentine's Day massacre actually ended up being a pretty good day for the bulls. Early this morning, we did have a very poorly received retail sales report for the month of December, but we did find the bulls fighting throughout the rest of the stock market session, and in some cases actually closed in the green, at least for the NASDAQ and the Russell 2000. So pretty impressive showing there. We did hear some news about President Trump and border wall funding. That kind of jolted the markets a little bit as well. And then we started getting some 13F filings from some major fund managers and other institutional investors such as Warren Buffett, who did add a new energy name to his Berkshire Hathaway portfolio. So we're going to concentrate on that for our application example for today. With that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's February 14th, 2019. First of all, if you're new, welcome aboard. We're thankful to have you in our audience here tonight. Remember, you can go to YouTube, click subscribe while you're over there, then also go into the description area and sign up for our email distribution list. If you're following us on Twitter, we'd appreciate that as well. My handle is @BrandonVanZ. The Market Scholars handle is @market_scholars. And then lastly, we do have a presence on Facebook as well. Feel free to join us at the group web address embedded in the logo in front of you. All right, let's go ahead and dive into the charts. As you can see, I've got chart 4B pulled up in front of us right now. As a reminder for those of you that are newer, this is a 4-grid that is looking at the 4 major U.S. equity indices, 3 months in length, with each one of the candles representing 1 day in length. And you can see up here the S&P 500 was down just a hair today. It was down 0.27, but well off of the pre-market lows that a lot of investors were kind of anticipating to paint the tape pretty negatively here today. You can also see that the Dow was down 0.41%, but as mentioned in the intro, we actually did find a positive result out of the NASDAQ composite. It was up 0.09%, and then the Russell 2000 was 0.14% to the plus side. So a bit of a mixed picture there today with 2 of the indices in the red, 2 of the indices in the green. But again, judging by how the futures market was acting before the stock market opened this morning, I think a lot of people would call this a win for the bulls in the end. You can see that we continue to have a bullish posture using the market forecast intermediate term line, which is our kind of our default setting here during these videos. And remember that you can always see that visually very easily when you're watching these videos by looking at the background color of these charts. When they're dark green like they are right now, it tells us that we do have a strongly bullish posture. So more of the same, really. You know, we've had a bullish posture for several weeks at this point, and we continue to have it. Now, obviously, we don't expect the market to go up every single day. There will be pullbacks along the way, but as it stands right now, this is a market that seems to have its path of least resistance to the upside rather than to the downside. Let's take a look here at our next chart setup. In this case, let's go to chart 4C, and this will be our 3 green arrows chart setup. And when I was with you a couple of days ago, I was referencing the fact that we had a 3 green arrows signal down here on the Russell 2000, but the other charts didn't quite have that yet. Well, kind of interesting to see how things have shaken out in just 2 days' time, because we actually did end up getting 3 green arrows on the S&P 500 yesterday, and we did as well on the NASDAQ composite. The problem is we gave it right back today. So you can see these are kind of precarious situations where we're at right now. In particular, the momentum is being called into question, and that's why you're starting to see the red arrow switch to the green arrow, back to the red arrow on both the S&P 500 and the NASDAQ composite down below. Kind of gives you a sense that there's a bit of a tug of war going on between the bulls and the bears in terms of the true momentum currently. And so we'll keep our eye on that story, but right now it's interesting to note that the small cap market seems to be holding up reasonably well. In fact, you can see that we're pretty close to hitting multi-month highs on the small cap. Let me right-click on the Russell 2000 chart here and go to Maximize Sell. You can see this a little bit better. Notice that where we were at our high point today, basically the only other candle on this entire chart, which this is 3 months in length here, is this candle where we set the high back here on December 3rd. That's it. That's the only one. Even this next candle was not trading at the levels of where we were at today's high. Now, obviously, we didn't close at today's high, so it wasn't a home run day for the bulls by any means, but nonetheless, we are eking our way to multi-month highs here. It could happen as soon as tomorrow. If we have a decent day in the stock market, we could be looking at 3-month highs in the Russell 2000. And remember, Russell 2000 is made up of small cap stocks and is oftentimes kind of viewed as a bit of a proxy for risk in terms of the risk that investors or traders are willing to assume right now. And so when the small cap market is kind of outperforming, it's generally viewed positively in terms of the health of the overall market. So we'll see if that can lead to further upside potential. But right now, things are looking pretty good for those small caps. And in fact, that's one of the things that I referenced yesterday for those of you that are premium market scholars that might have went to my strategy lab swing trading class, where we look at the 6 different factors that drive market outperformance. And one of those factors that is leading the way in 2019 is the size factor. Let's go ahead and now take a peek here at our next chart. This one is going to be chart 4D. This will be our longer term view. Remember, this is the 1040 crossover method chart. And rather than looking at 3 months of time for each of these charts, we're looking at 3 years in time, and each one of the candles represents 1 week. We're getting closer to the end of the week, so remember that since each one of these candles represents 1 week, we don't actually know for sure where things shake out until Friday afternoon. But as I kind of alluded to on Tuesday, we are starting to see some indications of strength, even from a longer term perspective. Right now we technically have kind of a bearish crossover scenario that we're dealing with, and that has occurred since late last year. You can see the pink background color on the Dow Jones here as an example, but let me right click on that and go to maximize sell, and you can see that we're actually really close to crossing it. In fact, if you look down below here, notice kind of in the lower right hand corner, we've got this MACD2 line that pulls up below the chart itself, and this is meant to give you a much more fine-tuned visual on whether the crossover is occurring or not. In this particular case, if the black line was crossing up and through this pink line right here, that would mean that this orange moving average is crossing up and through this blue moving average. So you can see that it's about as close as you can possibly get. It's nearly touching the pink line. In other words, it's possible. I still don't think it's likely because it's just 1 day tomorrow, but it's possible if we had a really big day tomorrow, we could actually get a bullish crossover on the Dow Jones as soon as tomorrow. I doubt that's going to happen, but nonetheless, we are within spitting distance of it. So the likelihood of that occurring within the next few weeks, I would say, is quite good. And so we might see this chart on the Dow Jones revert from a pink background to a green background, signifying that the 10-week moving average is now back up above the 40-week moving average. And that's what occurs when that orange line goes up and through the blue line on the upside. And that would generally be perceived positively. It gave kind of a little bit of a shakeout, kind of got rid of the weak hands of the market here in the late part of 2018. And perhaps the longer term investors are being resilient and willing to ride that wave, that crest higher. Now, no one knows how that's going to end. Obviously, we've been in an economic expansion period for a long time, and that won't last forever. But we've also had a Fed that seems like they are willing to listen to the market, willing to be accommodative when necessary. And it seems like we've got cheerleaders from a political perspective as well. So in general, there are many more constituents out there that would prefer to see stocks higher rather than lower. And so that tends to put the wind in the sails of bulls, all else being equal. So, it's kind of hard to kind of fight those trends when they exist, and that's where we find ourselves right now. Let's go ahead and find out about our intermarket analysis now through chart 4E. And this is going to be the 12 grid that will show us the background color on whether we're bullish or bearish on each of these charts. And so when we have a green background, it tells us we're bullish. When we have a red background, it tells us we have a bearish posture, and that's, of course, according to the market forecast intermediate term line, which is kind of our default line that we use for establishing posture during these videos. So as we look at this, a couple of the areas that have been capturing my interest recently have been kind of on this bottom rung here. I've been very interested to see how things are shaking out with the dollar. I was mentioning on Tuesday that we can officially say that in the last month and a half, we officially have a higher high and a higher low that has been established with the US dollar. And that can kind of cause some waves throughout the rest of financial markets as well. The stronger that the US dollar is, traditionally, the weaker that commodities are and the weaker that foreign investments are. So it does have an important consideration for many traders that are out there, and that's kind of where we find ourselves right now. You will see that the ag commodities, I referenced this on Tuesday as well as being in a downtrend. Today, things really got carried away. This was a really ugly candle here. In fact, let me right-click and go to Maximize Sell to kind of let you see this a little bit better. Notice that we are at 3-month closing lows for DBA, which is what we're using as our proxy to kind of establish what's going on with agricultural commodities. And so, it does seem to me that the US dollar, the strength in the US dollar is starting to affect a commodity like DBA. On the other hand, when we look at something like gold or GLD, notice that GLD actually popped a little bit higher here today. And this gold story is one that, I hate to sound like a broken record because I know I bring it up a lot during these presentations, but it just doesn't want to go down. It's refusing to go down when you would assume that it would. And so what that means for the future, we'll never know. What it means for me right now is that resilience, that stubbornness is worth paying attention to. And I think gold remains an interesting place to be kind of seeking trades, at least to the upside. We continue to be above a rising moving average, and right now this thing is withstanding the pressures that should be placed upon it by the fact that we do have a strong dollar and the fact that the stock market is supposedly in a strong condition right now. And usually when gold shines is when there's a lot of turbulence out there and people are seeking a store of value or a safety place, or just simply that the US dollar is going down. And so it's a bit peculiar that gold is shining in the face of an environment where it naturally wouldn't be in most other market conditions. So kind of like I've mentioned in a previous presentation, it's a bit of a poker tell. And so I continue to be impressed with the strength of the gold, and there may be some interesting opportunities in that area. There is one stock that has been shining in that area that some of you might not be as familiar with. I think I brought it up here in the Market Outlook one other time, but it's Kirkland Lake Gold. And this particular security hasn't been around all that long. It's not as well known of a gold stock as many of the longer held kind of senior major mining companies out there. And so some of you might not be familiar with ticker symbol KL, but keep it on your radar. This thing looks like a Mack truck to the upside. It's really humming along here at a brisk pace, and it doesn't look like it's going to give up the ghost anytime soon. So there could be a nice little momentum trade waiting for you, whether you're looking at gold or one of the individual mining companies that benefit when gold prices are resilient, like Kirkland Lake Gold here. All right, let's take a look now at some other charts. Let's go over here to our foreign stock markets chart. This is chart 4F. All right, and as we pull this up, same kind of understanding of the 12 grids. When we have the pink background, it's a bearish posture, and when we have a green background, it's a bullish posture using that market forecast intermediate line. So here you can see it's a bit more of a mixed bag. We've got about half of the charts, not quite, but almost half of the charts with a pink background. In particular, I will reference India again because I mentioned that the last time that this one is starting to become a bit more concerning for the reason that it's a security that not only has a bearish posture according to the market forecast, but it's also trading below a falling moving average, and that's why that moving average itself is red. You'll notice that while Russia and Mexico and Germany and South Africa also have a bearish posture right now according to the market forecast, the moving average lines are still trending up. So it's not quite as disturbing of a signal, because we could see those charts pop back higher and we might look back and say that was actually an opportunity to buy, not to sell. With India, it's a little bit more concerning, because if India continues to weaken, and this moving average itself continues to curl lower, the concern becomes that it becomes a resistance area. In fact, you can almost see that playing out on this particular candle here, where we broke through that moving average, reverted to the mean, it approached that 30-day moving average there, it decided it didn't want to break through it, it rejected it and pushed back lower. And if that continues to happen on a falling moving average, well, that'll essentially put in a series of lower highs and lower lows, and that would be considered a downtrending security. Now, that's a lot of ifs. We don't know if that's going to occur or not, but it's just something that we should be aware of in case it does play out that way. Some of the other areas are a bit more robust. In fact, one thing worth pointing out is that Brazil had a very nice day. Brazil was up 2.74% here today. Not only that, but that's a nice bullish engulfing candle there. Let me right-click on that chart and click on Maximize Sell so you can see this a little bit better. Notice that this candle today engulfed two of the previous candles there, and engulfed, you know, several of those candles before that as well, just to kind of give you a sense of the size of that candle. And the fact that we closed near the highs of the session is generally perceived positively by market participants. So we do have a bullish posture on it. We know that because we have the intermediate line at 71.08 and rising. And remember, anytime the intermediate line is between 20 and 80 and it's rising, we would consider that a bullish posture. But, you know, in addition to that, we're above a rising moving average as well. This moving average color will revert back to green starting tomorrow when it starts getting painted, because that moving average is still rising. And today we now popped back and bounced and closed above the moving average. You'll notice that yesterday we closed just a hair below the moving average, which is why that moving average reverted to yellow. But tomorrow it will revert back to green, and we are now trading at, you know, a 1 week high on Brazil, because really the last closing price that was higher than where we ended today was back on this candle before we had that little bit of a gap down right there. So, you know, this was a very strong showing for Brazilian equities here today, so keep your eye on that story as well. All right, let's switch our focus now over to the US markets and check out 4G here. This will look at the major sector ETFs for the S&P 500. So I want to emphasize that, because remember, this is not a equal weighted version of the sectors out there. This is a market cap weighted version, and so there will be some differences out there if you're looking at more of an equal weighting, but nonetheless it's a good quick proxy for us to kind of get a sense of what's been going on with the various sectors out there. Remember that the chart in the upper left is going to be the S&P 500, and then all the other charts kind of following it there are the sectors that make up the S&P 500. As you can see, we've got a clean sweep in the United States. Every single one of these charts is green. Every one of them has a bullish intermediate posture. Many of them have had bullish intermediate postures for a while now. Some of them have just recently received it, but nonetheless, right now, there is at least some semblance of strength within every single segment of the U.S. stock market. That's a strong sign, and it's not something that happens regularly. Remember, a lot of times you see money rotating from one sector to another. Right now, there's money flowing into basically all of these sectors, at least here over the last several weeks. So as it stands right now, you'll notice that every single one of these charts not only has a bullish market forecast posture, but every single one of these charts is trading above a rising 30-day moving average. Notice every single one of those moving average tips is green right now. Again, another sign from the marketplace that it prefers to take on risk within the stock market at this particular juncture. There are perhaps some signs that you want to be maybe a little bit more hesitant than you would otherwise. You know, naturally, after a market's gone on a huge run like we have here recently, you don't want to get overly aggressive near the tail end of a move or anything along those lines, so that goes without saying. But in addition to that concept, be aware that we have started to see a few of these overbought cluster signals in some of these sectors here. So the staples received overbought cluster signals here within the last week. We also saw that occur with the utilities and then also real estate. So a lot of those kind of interest rate sensitive sectors showing perhaps a little bit of overbought conditions. Now remember, just because something is overbought doesn't mean that the security can't continue to go higher. What we typically view that as when we see those clusters is that the conditions that existed to get that stock, or in this case that ETF, to that overbought condition will not continue at the same pace going forward. So in other words, if we saw the security go sideways, go down, or even continue to go up, but just not go up at the same pace that it's gone up in the past several weeks, then that's kind of how we would look towards those overbought signals that we see there. So anyway, things are looking pretty strong there. Now, one sector I wanted to point out in particular, as we'll be talking about it here in a moment for our trade application, is the energy sector. One of the things that I mentioned yesterday in my strategy lab class as well is that the energy sector, if you go through a bunch of energy stocks, stock charts, you're going to find a lot of interesting bounce candidates that are setting up. Now, I don't know if that's going to lead to anything. We've been disappointed by oil and gas stocks plenty of times in the last year, but nonetheless, they're setting up again. And you can kind of see that even XLE is taking some decent shape here. It's not necessarily, the most attractive chart that you've ever seen, but you can see some positive tendencies here where the stock, once it got up and through the moving average right here, spent some time kind of forming some higher highs and some higher lows, pulled back fairly significantly right here, but caught a bounce exactly where you want it to, which is right on that moving average, which can oftentimes be used as a launch pad either up or down. Notice that back here when it touched the moving average, when it was below it initially, it was used as a launch pad down. In this case, now that we're crossing back up above that moving average and it comes back to the moving average, hopefully it's being used as a launch pad back higher. So we'll have to see where that takes us, but it's worth noting nonetheless. One thing that I did want to quickly point out is you can watch our Market Outlook videos here on our website at marketscholars.com. If you come over to the blog area, we try to make it nice and easy for you to engage with us on social media by posting the Twitter and the Facebook links directly below where you're watching it. I sent out a call to action for you guys last time, or maybe it was a plea for help, I don't know. But I said, I only got 85 likes the last time. I'd sure like to get that up over 100 if we want to make sure that our time, our use of recording these videos is worthwhile. You guys stood up at attention. I appreciate that. I appreciate each and every one of the 102 of you that did click like last time. That is exactly what we want to see. So thank you, thank you, thank you. We appreciate you guys. Not that it needs to be said anymore, but especially on Valentine's Day. We'd like to show you the love. And so thank you for your support, not only today, but over time as well. So thank you to everybody who continues to do that. Remember that tomorrow, David has his technical analysis trading room. That is a fantastic classroom experience there where he brings pretty much a new technical indicator to his trading room every single week to teach his students about technical analysis. And so if you are a premium market scholar, make sure you're tuning into them. And if you can't attend them live, remember every single one of our trading rooms is recorded for you to watch later. And then remember, this weekend is a bit of a different weekend because we do have President's Day coming up. So then our next class after that would be my dividend growth investing class on Tuesday, the 19th. Also, while we're over here, just a reminder that I did have my question and answer session for my premium students here today. So if you want to hear my comments or responses on things like ticker symbol PEY, which is a high yield dividend achievers ETF, we had a question on that. We had a question on the scan function and some of its uses or perhaps some of its limitations as well. We had a question on Lazard. We had a question on Coca-Cola. That stock really struggled today after their earnings. We had a question in general about stock prices that go up or down after you purchase them for the intent of income investing. We had a question about REITs and how we can start thinking about them differently than other stocks out there in terms of things like return on equity, which you have to think about them a little different in terms of cash on cash metrics. We did have a question about CenturyLink. I am happy to report that we've never bought CenturyLink in my dividend classes because I've never trusted that dividend, and last night proves exactly why that is the case. They had a big dividend cut announcement last night. We did have a question about paper money versus real money in terms of some of the limitations like the scan functionality, and then we had some questions about sector and industry analysis. So anyway, a lot of good conversations we had today as always in my Q&A session. Make sure you're checking that out. Now, before we get to the trade application example, let me show you something real quick that I just spotted before we got into the presentation tonight, which is the 13F filings have come out. Remember, if 13F filings are required by the SEC for institutions over a certain size of investment value to report their quarterly changes in their stock holdings. And so that's widely followed. And remember, the SEC does give a 45-day grace period after the quarter ends. And so most hedge fund managers and institutional money managers will take full opportunity to take that full 45 days. And so today is the 45th day or the 44th day of that grace period. And so we did have a major 13F announcement come out just here tonight after the bell, and that was from Berkshire Hathaway, a company near and dear to my heart, and one that I follow closely as a longtime admirer of Warren Buffett. And you can see that some of the positions that he was dabbling in the fourth quarter, so these would be reported upon, what was going on basically between October and December over at Berkshire Hathaway. They entered into Red Hat, which is being acquired by IBM, so that might be a little bit more of an arbitrage situation that they're doing right there. But also SU, and that is a position that is no stranger to Berkshire Hathaway. If you go back several years, they actually once upon a time used to own a position in Suncor back in the old days as well. And so let's go ahead and pull up Suncor and see where we stand with that particular stock right now. This is a major integrated oil company. Some of you are not as familiar with it because it is a Canadian company. So it's not quite as well known as perhaps ExxonMobil and Chevron are to those of us that live in the United States. But nonetheless, it is a major corporation. In fact, they have a very strong position and a huge acreage in the tar sands up there. That was a popular talking point back in 2008 and 2009, and that era when we were talking about peak oil. Boy, it seems like we've come a long ways since then. But nonetheless, they are a major integrated oil company up in Canada. And Berkshire, once upon a time, held a substantial stake in them before liquidated it. It looks like they want to give it another swing. And so as you can see here, when we pull it up on the market forecast view, this is chart 4A, you can see we do have a bullish posture on this particular security right now. Not only that, but like a lot of energy companies, in general, over the last, let's call it year or so, the company has struggled. Meanwhile, its dividends have continued to kind of go higher over time. And so one thing I wanted to point out just real briefly here is that this is a value line tier sheet here that I got from the library. But anyway, this is Suncor Energy, and you can see that its yield was, let's call it 3-4%, somewhere in there. And if you compare that to its average annual yield down below, notice that it has never yielded more than what it's yielding right now. The highest yield prior to that was on average back in 2016. And so for income-oriented investors, they may very well be interested in Suncor as well, not just because Buffett took an interest or it's got excellent acreage with tar sands or anything like that. They might be just interested in it because it could represent an interesting income investment right now, since price has largely languished over time. You'll notice that the high price here was about $55. And this is the Canadian version, so up in Toronto, but nonetheless, it can give you an idea with the ADRs here that it put in a high in the middle of 2018 and then came down pretty substantially there, and that's where we kind of find ourselves right now. So what I thought we would do for tonight's trade application is try to sell a put on Suncor in order to try to acquire it at a cheaper price. Now, I don't know if that's going to occur because a lot of times you will find that when Buffett announces a new position in the Berkshire Hathaway portfolio, the stocks do kind of get up and away. For instance, right now it is trading higher in the after-hours session. The last traded price was $33.20. And so you can see that's a good, 60, 70, 80 cents higher than where it closed today. So I don't know if we're going to get filled here, but I thought we would place a trade just to see if we could nonetheless. You'll notice that on the $31 put, and I'm looking at the March contracts, 29 days left until expiration. The $31 put, so let me kind of maybe highlight that right there. You can see that the bid price was 31 cents, the ask price was 43 cents, and that the last traded price was 36 cents. Now, generally speaking, I'd like to get at least 1% of the strike price when I'm selling puts. And so I'm going to put this trade in with an order to try to sell it at 31 cents. Now remember, if we place this trade right before the market closed tonight, we would have gotten filled immediately because there's somebody sitting there right now willing to buy it for 31 cents, or at least there was right before the market closed. But do keep in mind that if this stock does pop before tomorrow's open, that buyer may think twice about that and might step away, and you might find those options contracts get adjusted. So there's a decent chance we wouldn't get filled on this immediately tomorrow, but I'll put it in as a good till cancel order, and that way if the stock does jump a little bit too much tomorrow, but it does pull back, let's say early next week at some point, we still stand a decent chance. Now remember, when we're selling a put, just to kind of catch everybody up to speed, in this case we're saying we're willing to buy the stock at $31 per share. It's trading at $32.55 right now at tonight's closing price. And so we're saying we're willing to buy this about $1.50 per share cheaper than where it's trading right now. And in return for our willingness to do that, we would receive a premium up front. That's what that credit that gets placed in your account is doing for us. So we get to take in money to start this trade. And if the stock goes up, we keep the money that we took in as premium. If the stock goes down, we have to be committed to purchasing at least 100 shares of stock at $31 per share. So let me go ahead and click on the bid price here. I am going to leave that at 31 cents because we're dealing with the $31 strike price there. And I am going to change this to a good till cancel in case we don't get filled first thing tomorrow. Confirm and send. Review that one last time. Everything looks good, so let's send it off and see if we can get filled tomorrow. All right, well, I want to thank you for joining me here today. Happy Valentine's Day to all of you. Hopefully you have a nice candlelight dinner or something planned for that special one in your life. And remember that we do have a long holiday weekend here. So for those of you that have access to our classes, we won't be in class on Monday, but we'll get back in touch with things there on Tuesday yet again. So with that, have yourself a great rest of the week. David will be with you tomorrow, and then I'll see you next Tuesday. Take care, everybody. Bye-bye.